What's up? A little bit of a different approach here today. So at this video, obviously you guys see the title. I took an account from $5,000 and built it up to 21,000 plus. I haven't checked it today, but we're right around that $21,000 mark. And I wanted to kind of talk about how I did this. Now, I'm not going to tell you how it took $500 and turned it into 21 grand in 4 months. No, that's not how this took place. It was a very realistic approach. I'm not one of those people that'll tell you 3 easy steps can make you a millionaire. That is not what this channel is about. It's really about taking the most realistic approach and what's great for everybody and how everybody can learn how to do this on their own. Now, to kind of preface this, I took $5,000 as my starting point, and then I took a percentage of YouTube revenue to kind of replicate or illustrate what it would be like if you were working a 9 to 5. So if you're taking your 9 to 5 job, whatever your wages are, I would suggest maybe taking about 10% of whatever you earn and putting it into your account to continue to build onto that. Because the more capital you have, the faster you can grow this thing. And so that's the approach that I took. I started off with a nice nest egg of 5,000 bucks and built this up to 21,000 with profits and capital combined. Total portfolio performance, say that 5 times fast, was 80%, just about 75 to 80%. And I'm going to show you this in just a moment on what I'm invested in, what things I bought, and what kind of losses I took and all that stuff in a second. But I just wanted to preface this by saying that this wasn't just me starting off with 500 bucks, trading a bunch of penny stocks and getting here. No, this was a little bit more of a grind, adding more capital to it and getting to over that PDT hump that everybody tries to get over. Now, I still have a little bit of ways to go here, $4,000 more to go, but we're on our way, and I think that we'll hit it very, very soon. So let me show you exactly what I mean and how I was able to build this portfolio to where it's at today. All right, so again, just to give you perspective, I started this account out with $5,000 and I've been adding 10% of my YouTube revenue to it each month. Now, the YouTube revenue can range anywhere between $5,000 to $7,000 a month. So they give that, put that math together. And then, this all told, total capital that I have into this is around $10,000 to $11,000. Now, I'm up $8,500 profit total since starting this account, which is around 76% gains. And so here it is. Here is my portfolio. As you can see, 76%, max gains since inception, which was right at the tail end of August, early September. I didn't really start trading with this account until September, so that's what I'm giving myself. 20,972 as of this recording. Hopefully it'll be more than this by the time you end up watching this video, and working our way to breaking over that PDT, and just giving you perspective here. So if we're comparing it to the rest of the market in this period, the market did 11%, which is pretty normal, pretty average for the overall markets. This account, when you compare it, is again at 76.12%. So this is an incredible move. I'm really pleased with the way that this has been performing. But also, look, when I first started out, you can see that there's quite a bit of red and green. So I was incurring losses and gains and slowly starting to build this up as I was adding capital. And really, October was a really horrible month for me, really tough stuff. But then it started to really pick up, and the overall market did really well in the mid to end of November and really into December as well. And then obviously January has been doing pretty solid too. Now, to give you perspective on how I was able to do this, you can see my biggest win right now is at Penn National, and this includes realized and unrealized gains. So right now I'm way up on Penn National. I'm actually up around 50% on Penn, which is really incredible because this isn't some penny stock that I was trading, right? This is a legit company, solid company, and I kind of wanted to show you guys that these aren't penny stocks that I'm trading. These are really good, solid companies, things that I'm doing a lot of due diligence on and feel really confident on. And so you can see how well Penn National did for me. Obviously, Tesla did really well too. I've been in and out of Tesla, swing trading, not necessarily day trading on Tesla. I think I day traded once since I started this account, but nothing crazy, just playing the swings. This has been really quite predictable for the most part, and obviously really bullish. So this is probably one of my bigger wins, but take a look at how big these wins are. $2,800, $2,700, Zoom, $1,300. And I've been in and out of this one. Square,
Clover, you can see a lot of these are just doing really, really well. And I was able to lock in a lot of these gains, but continually swing them as well. These are ones that the theme here is that letting your runners run is how you really start to grow this account, but then also minimizing risk. Now, let's take a look at the other end of the spectrum here. My biggest loss when you compare it to the near $3,000 gain I had on Penn National, and even closer still with, and look at this, we just crossed over 21,000. So that's pretty cool. Is $357. That's my biggest loss. And had I been a little bit more patient with Palantir, I actually would have been in the green on this one, but wasn't patient enough, didn't follow my own plan, and ended up getting out of this for a loss. It happens sometimes, but the positive here is that I took a small loss on this compared to some of the gains. And that's really where a lot of people get tripped up. Most people like to just sit in things forever, especially when it's just a garbage penny stock. And I think the misconception here is that sometimes when you look at stuff like that, like especially penny stocks, things that are really unreliable, something that's just gone up 1,000% that you bought the top on, the reality is that most of the time that kind of stuff is not going to come back. But I will say I am actually pretty red on a couple of things, such as, well, just two things right now that I'm actually red on in this portfolio, which is, and one of them is Rocket. That's a big one that I'm red on right now. I'm actually down quite a bit, about 7.5%, but it's still $400. And the reason I haven't sold out of this one is because I do feel really strongly about Rocket and the company that it is. I just don't know why it hasn't got the movement that it has. And I know some future catalysts that are coming for this thing. We already know the housing boom has been just absolutely incredible. We know that people have been refinancing their houses because of interest rates and that sort of thing. And we also know that Rocket plans to buy back $1 billion worth of shares. So I think with all of that in mind, me looking to sell Rocket just doesn't seem to make a whole lot of sense at this point. And I have other funds to be able to trade with so that I can actually, continue to build wealth and continue to build this account while I can just let Rocket stay. So you can see that I'm still in Penn National, I'm still in Tesla and the like, and I can afford to let Rocket stay there because I've been adding to this account to be able to trade more of my capital with and more of my profits with as well. Now, just to give you perspective on the strategy that I've been using, these are all swing trades. It's been rare that I've made day trades on this account because obviously I'm under that PDT rule. Real close to getting over it now, which is pretty awesome. But, it's been all scaling in, scaling out, buying little chunks here and selling out little chunks there. And, taking profit when I needed to, not getting too greedy, all that good stuff, having a plan. Speaking of plans, I got 3 things that I really want you to take into perspective when starting off with a small account yourself. So here we go.
Now, there's 3 things that I also wanted to add to this to get you guys to really understand how you can do this on your own. And rule number 1 is lower your expectations. Starting off with $500 to $1,000 and expecting a $100,000 return without adding anything to it is just simply unrealistic. Make sure that you're continually adding capital to your account every single month, whatever percentage that you're comfortable with, so that you can continue to build this account and get it to a point to where you could possibly one day just live off of your trading account. Number 2, I just want to make sure that you guys understand that you need to have a plan every time you push the buy button. You got to know how you're going to make your exits before you even think about buying. So understand price action, know how you're going to get in and out of stocks. Are you going to be scaling in and out like I do? What's your strategy? What makes the most sense to you? And what resonates with you as far as a plan is concerned? Because if you don't have a plan going in, it's going to be an absolute mess. And that's where a lot of new traders and new investors really screw up. Number 3 is take responsibility for yourself. Don't follow people's trades on Twitter. Don't follow my trades. Do the due diligence that you need to do. Do your own work and make sure that those buying and selling decisions are your own. That way you can take that responsibility for yourself and you can actually start to become more independent with your trading. You don't have to rely on this person or that person because really there's no guarantee that they're going to be around forever. I just don't want people to rely on Twitter because sometimes, or anything else for that matter, because when you can make those decisions yourself, first of all, it's going to be way more rewarding. Second of all, you don't have to feel like you're relying on somebody, and the feeling of independence is just going to be really good for you. And then you don't have to worry about, well, is this person right or is that person right? You're going to have the confidence to make those trades. You're going to have your plan and you're going to keep your expectations realistic. Those are going to be the 3 things that I would suggest that you do if you're starting off with an account. So let me know what you think. Are you over the PDT rule? How did you end up overcoming the PDT rule? Or if you're not, did this strategy resonate with you? Are you more interested in learning about this? If so, let me know in the comments below. I would love to hear from you guys on this. And also, if you're visiting for the first time, please like, subscribe if you got value out of today's video. Hit that notification bell as we go live a lot. And you guys want to be part of that interactive community, we'd love to have you over there. Also, if you want to be part of the Chaos Crew, the join button is next to subscribe as well. Guys, thank you so much for tuning in. As always, I will see you all before the bell, and B Smith is out.